All right, everyone, let's dive into Nepal's banking system.
Sounds good.
We've got these excerpts from an article, and it really gets into some interesting stuff about loan provisioning and non-performing loans.
Oh, yeah. That's a hot topic for sure.
I'm a little worried about what all of this means for regular folks, everyday people.
Yeah, I get that. It's a complicated system for sure, but understanding it, I think that's key to getting a handle on how healthy Nepal's economy really is.
So maybe we should start with this whole loan provisioning thing. The article, it defines it as banks putting aside money, kind of like a rainy day fund, to cover potential losses.
That's the gist of it. It's standard practice across the globe, It's a safety net.
But what happens if they actually have to use that money?
Well, it can definitely hit their profits, that's for sure.
Yeah.
But the bigger question is what leads to that situation in the first place? That's where things get tricky. Nepal's central bank, the Nepal Rashtra Bank, they recently decided to up the provisioning requirements.
Wait, wasn't there some controversy about that? The article mentioned the governor denying that it was meant to, limit bank profits or something.
Yeah, you're right, there was. It's a pretty common argument, though. Some folks think it's necessary to keep things stable, especially with all the global economic uncertainty right now. But others are worried it might actually hurt economic growth and make it harder for businesses to get loans.
So basically, more provisioning could mean banks become more careful about who they give loans to.
Exactly. And that could ripple through the whole economy.
Wow. Okay, so it's a pretty big deal then.
Definitely a balancing act, trying to keep things safe and also keep the economy growing. It's tough.
Well, speaking of the Nepali economy, the article kind of paints a picture of resilience, doesn't it? I mean, they've been through earthquakes, pandemics, all sorts of stuff.
Oh, yeah, super resilient. But they are facing some headwinds right now. Slow growth, not much demand for loans, and then this issue with non-performing loans. NPLs, for short.
Right. And
The article actually drops a pretty startling figure. Over 233 billion rupees in NPLs across all these financial institutions.
oh, wow. That's a lot.
Yeah, that's a big number.
So what does that actually mean for people in Nepal? Are businesses going bankrupt? Are people losing their houses?
Well, I don't think it's quite that dire yet, but the consequences could be pretty serious. I mean, when loans go bad, banks have to basically write them off as losses. That cuts into their profits, obviously. And that can lead to what they call a credit crunch, which basically means it gets harder for everyone to get loans, whether it's a business trying to get funding or someone wanting a loan for a house or education or whatever.
I'm starting to see how this all connects, yeah.
It's definitely all tied together.
So I guess this is where loan provisioning comes back in.
Right. If there are more NPLs, banks need to put aside even more money to cover those potential losses.
It's like a constant juggling act for them, isn't it? They need to manage the risk, make sure they're covered if things go south, but they also need to keep lending money to help the economy.
Exactly. It's a tough spot to be in, for sure.
Okay, so we've talked a lot about the not-so-good stuff. But the article did point out some things that are actually looking up, like remittances are increasing and people are putting more money in the banks.
That's right.
Is there some hope on the horizon then?
Well, it's kind of too early to say if those are just temporary improvements or if things are really turning around. More remittances are always good because that brings money into the country, but it can be unpredictable. And while more deposits might mean that people trust the banks more, it doesn't always mean that they'll be lending out more money.
So things could still go either way.
Pretty much, yeah. We're not out of the woods just yet.
So what are banks actually doing to try to deal with all these NPLs? I mean, the article talked about things like restructuring loans and taking legal action.
Those are definitely options, but it really comes down to the specifics of each case.
Okay, so it's not a one-size-fits-all kind of thing.
Right. Banks need to figure out if a borrower just can't pay back the loan or if they're just choosing not to.
So is there a difference between someone who's hit hard times and someone who's just trying to get out of paying?
There is. And how a bank responds depends on that. Like if someone usually pays on time but has hit a rough patch, the bank might restructure the loan. Maybe they'll give them longer to pay, lower the interest rate, or even let them pause payments for a bit.
So kind of like giving them some breathing room to get back on track?
Yeah, exactly. The goal is for everyone to win, ideally. The borrower can eventually pay back what they owe, and the bank doesn't lose too much money.
That makes sense. But wouldn't doing that too much, like restructuring loans all the time, wouldn't that encourage people to take bigger risks, knowing they can just renegotiate later?
That's a good point, and it's definitely something that banks have to be careful about. There's a balance between being understanding and making sure that the whole lending system stays strong.
So how do they walk that line?
Well, it all starts with doing their homework. They need to be really thorough when they're deciding who to give a loan to, making sure the borrower has a good plan and can actually pay the money back. And they have to be really clear about the terms of the loan and what happens if the borrower doesn't pay.
So everyone needs to be upfront and honest, basically.
Exactly. Transparency is key. And it's not just about the banks and the borrowers. The Nepal Rastra Bank, the regulator, they play a really important role too. They set the rules for lending and make sure the whole financial system stays stable.
Right. The article did mention that the Nepal Rastra Bank keeps an eye on how much money is flowing around, sets interest rates, and advises banks on handling those NPLs.
Right. They do a lot.
What does all that actually look like in practice, though?
It's kind of like, imagine the Nepal Rastra Bank as the conductor of an orchestra. They set the tempo, make sure all the instruments are playing together nicely, and step in if things start to sound off.
So they're not just watching individual banks, they're looking at the whole financial scene.
Yeah, that's it. By managing the flow of money and those interest rates, they can actually influence how much borrowing costs, whether banks give out more loans, and even stimulate the whole economy.
Sounds like they have a pretty big job then, keeping everything balanced.
For sure. Too much interference and things might not grow as quickly, but too little and things could get, well, unstable.
So it's a delicate balance.
It really is. And this is something that central banks all over the world are grappling with. Finding that sweet spot where the economy can grow steadily without causing inflation or encouraging too much risky behavior.
So how is Nepal's central bank doing with all of this? Did the article give any clues about their approach?
Well, the fact that they've upped those provisioning requirements suggests they're pretty focused on keeping things stable and managing risk.
Mm-hmm. I see.
It could be seen as them being proactive, trying to protect the banking sector from potential problems like another economic slowdown or a jump in those NPLs.
But wouldn't that also make banks less likely to lend money, which could hurt businesses that need access to credit?
It's a trade-off, isn't it? Stability versus growth. It's a constant tension. The Nepal Rastra Bank is basically betting that a stronger, more resilient banking sector, even if it means lending slows down for a bit, will ultimately lead to a better, more sustainable economy in the long run.
So it's a long-term strategy.
Definitely. And it's not just about numbers and economic indicators either. There's a human side to all of this too.
That's what I keep thinking about. We can talk about all these financial terms, but ultimately it's about how they impact the lives of real people in Nepal.
You're absolutely right. And that's where we need to focus our attention now. Let's dive into what this all means for people who have money in the bank, people who need loans, and the overall economy.
So we were just talking about like legal action and even bankruptcy when people can't pay back loans.
Right, right.
That's got to be super stressful, not just for the borrower, but I imagine for the banks too.
Oh, absolutely. Nobody really wants to go down that legal route. It takes forever, costs a ton of money, and even then you might not even get all the money back.
So it's kind of like a lose-lose.
Pretty much.
The article did mention restructuring loans as another option, but you said that depends on, well, a lot of things.
Yeah, it's not a simple decision. Banks have to look at each borrower's situation, like their financial history, what's causing the trouble, and how willing they are to work with the bank.
So they're trying to see if the person's really struggling or if they're just trying to get out of paying.
Exactly. If someone has a good track record, but has hit a bump in the road, the bank might be open to restructuring. They might extend the payback time, reduce interest, even offer a temporary break from payments.
Sort of like a timeout so they can catch their breath.
Exactly. The ideal outcome is for everyone to come out okay. The borrower can eventually pay off the loan, and the bank doesn't lose a bunch of money.
Okay, that makes sense. But doesn't restructuring, especially if it happens a lot, kind of encourage people to take on more risk than they can handle? Like knowing they can always just renegotiate later.
That's a good point, and it's a concern for banks, definitely. There's this fine line between showing compassion and setting a bad example that can make the whole lending system weaker.
So how do they find that balance?
Due diligence and communication are key. Banks need to be super careful when deciding who gets a loan in the first place, making sure the borrower has a solid plan and can actually pay back the money. And they have to be completely transparent with borrowers, laying out all the terms clearly and explaining what happens if they default.
Transparency on both sides, basically.
Exactly. And it's not just about the individual banks and borrowers either. The Nepal Rastra Bank, the regulator, they have a huge role in this whole thing.
Oh, right. They set the rule.
Yeah, they set the rules for responsible lending and make sure the whole financial system stays stable.
The article mentioned them monitoring liquidity levels, setting interest rate policies, and advising banks on managing those NPLs.
Yep, lots of responsibilities.
Can you break that down a bit? What does that actually look like in practice?
Well, think of it like this. The Nepal Rashtra Bank is like the conductor of an orchestra. They set the tempo, make sure all the instruments are playing in harmony, and jump in to fix things if they start to go off key.
So they're not just overseeing each individual bank, they're looking at the whole financial system.
Exactly.
Yeah.
By carefully managing the flow of money in the economy and those interest rates, they can actually influence borrowing costs, encourage lending, and even stimulate the whole economy.
So they have pretty big impact.
A huge impact.
Sounds like a tricky job keeping all this plate spinning.
It is. Too much intervention, and you risk slowing down growth.
Yeah.
Too little, and you risk instability. Finding that sweet spot is the challenge.
That makes sense.
And it's a challenge that central banks all over the world face. How to promote steady economic growth without causing inflation or encouraging excessive risk-taking. It's a constant balancing act.
So how do you think Nepal's central bank is doing? Did the article give any hints about their approach?
Well, them raising those provisioning requirements suggests they're prioritizing stability and risk management. Right.
It could be seen as a proactive move to protect the banking sector from potential problems, like a further slowdown in the economy or a surge in those NPLs, the non-performing loans.
But wouldn't that also make banks less likely to lend money, which could be a problem for businesses that need that access to credit?
That's the trade-off, isn't it? Stability versus growth. The Nepal Rashtra Bank seems to be betting that a stronger, more resilient banking sector, even if it means a bit slower lending in the short term, will ultimately lead to a stronger, more sustainable economy over the long haul.
So it's a long-term strategy.
Absolutely. And it's important to remember that it's not all about numbers and economic indicators. There's a human element to all of this.
That's what I keep coming back to. We can talk about all these financial terms, but it's ultimately about how all this impacts the lives of real people in Nepal.
Right. You've hit the nail on the head. And that's where we need to shift our focus now. Let's explore what this means for depositors, borrowers, and the overall economy. Okay, so we've covered a lot of the challenges facing Nepal's banks, but I'm curious, what about the good news? The article did mention some positives like those increasing remittances and the fact that deposits are up.
Right, right. Those are definitely bright spots.
What does that actually mean for the average person in Nepal, though?
Well, more remittances mean more money coming into the country, which is good news for families and local businesses. And when deposits are up, it generally means that people have more confidence in the banking system.
So it's not all bad news then.
Not at all. The Nepali economy is pretty resilient. It's weathered some tough storms. But we can't ignore the potential risks either.
Speaking of risks, the article talked about global economic uncertainty and how that could affect things in Nepal. What did they mean by that?
Well, Nepal's economy is pretty connected to the global economy, especially through trade and those remittances we talked about.
Yeah.
So big economies around the world start struggling. That could mean less demand for Nepali products and services,
Oh, I see.
which could lead to fewer exports and less money coming in from remittances.
So even if things are getting better inside Nepal, stuff happening outside could still mess things up.
Yeah, that's the risk. It's like, imagine Nepal's banking sector is trying to cross a mountain pass. There are obstacles along the way, like those NPLs we talked about, but then there's also the chance of sudden storms or avalanches that could come out of nowhere.
I like that analogy. It makes it really clear.
It's all about being prepared, right?
So what can Nepal do to get ready for those kinds of external shocks?
Well, one of the best things they can do is diversify their economy. If they rely too much on just a few things like tourism or remittances, they're more vulnerable. But if they encourage growth in lots of different industries, it creates a sort of safety net.
So don't put all your eggs in one basket.
Exactly. And that's where the government comes in. They need to make it easier for businesses to start and grow, invest in things like roads and bridges, and create policies that support a more diverse economy.
It sounds like everyone needs to work together on this.
You got it. It's a team effort for sure. The banks, the regulator, the government, they all have a part to play. And we can't forget about individual citizens either. Everyone can contribute by making smart financial decisions, saving money responsibly, and supporting local businesses.
So even our own choices matter.
They really do. Even small things can add up. When everyone's working together, from policymakers to everyday folks, Nepal can overcome these challenges and build a brighter financial future.
That's a great point to end on. This deep dive into Nepal's banking sector has been, well, a lot to take in, but also super insightful. It's clearly a complex issue, but there's so much potential there.
It has been an interesting discussion, and I'm glad we could dig into it together. The more we understand these issues, the better equipped we are to make informed decisions and contribute to positive change.
Well said. Thanks for joining us on the deep dive. Keep learning, keep asking those tough questions, and keep exploring the world around you.